Okay, we're gonna get started. All right, so let's look at our calendar. It's June 21st. So we had a holiday this week on Wednesday. Um, and the stock market actually did go up the day before the holiday. So that was fully expected. And currently we are overbought in stock market. So let's look at the S&P. You can see right now we're overextended, pretty overbought, and in the stock market, and you can see that the moving average, we're above all of the moving averages, and as you can see, we've been kind of hugging this 50-day moving average. And we have okay, 50-day moving average. Okay, you can see that we've been like above the 50-day moving average for over a year. We're overextended right now. A lot of times, the stock market corrects back to the moving averages over time, and we're approaching one of the we're approaching the summertime. The summertime has traditionally been bad time of the year for the stock market. You can see June, August, and September are bad months for the stock market, and we're overbought right now. So you can see where if we're following our channel here in the S&P, the next time we reach this bottom part of the channel is 5% below where we're at right now. So it would be quite normal for the stock market over the next couple of months to correct back to this bottom part of our channel. So that's a 5% correction. So be ready for that. And if that happened, then we'll probably, on our stochastics, will be oversold. And that would be a time, that would be the time to buy. Right now, we're overbought. It's not the time to buy. So let's look at our meeting notes of where we are in the calendar, stock market calendar. Okay, we're approaching the next couple of weeks. We're overbought, so I expect the stock market to consolidate and to go down. And we're looking around July. The 4th of July is always a good time in the stock market because everyone looks forward to the 4th of July more than any. Well, it's one of the top 5 holidays, and so there's a lot of good feelings in the air. So we're expecting at least a couple of good days around that holiday, and we're going to start some earnings later in July also. All right, so we do have September is always a bad month for some reason. I don't know why. We have the Fed meeting in September, and we have a holiday, which is good, right around the beginning of September. But right now we're overbought. So the big picture is you don't want to get overextended right now and get excited about stocks going up because things are pointing to stock market going down here. All right, I just wanted to the reason why we're doing this market timing is for new positions. It's not trying to sell everything in your portfolio. I'm 100% invested. I have a couple hundred every now and then to invest, and this timing is more of a for me. It's more of a when to put my money in, my new money in. And also, it's if you're trying to exit investments and you're in investments you don't like, this is the time to do it. It's not the time when everyone else is selling. But right now, everyone's excited and buying. So let's look at some of our talking points. The 10-year and the 2-year treasuries are basically unchanged since the beginning of the week. Um, so because of that, you have like a sideways in the market. There's not really a up and down, but the treasury's been going down. The 10-year treasury is what we're looking at. You can see it's been on a downward trending, lower highs, lower lows, and the S&P is continuing to go up while the treasury goes down. Today, the treasury is going up, so we expected the stock market to go down with that. But so far, that inverse correlation is continuing. And the theory behind the U.S. Treasury is this is a guaranteed investment. It's as close as we can get to a guaranteed return on investment. So if the, as an example, as this Treasury yield goes up, people will not want to get into riskier investments like stocks if you have a guaranteed return that's higher than what you would get on the risk related securities. All right, so let's look at some of these sectors that are going up and down today. We can see that the biotech ETF is doing good today. This was one of Dan now favorite sectors at the beginning of the year. And we see real estate, we see healthcare and technology. See what let's look at the ones that are doing the worst. Gold mining. I'm not sure why gold is down so much today. Let's look at the gold ETF. Okay, you can see that last week we mentioned it was at the bottom of this channel and oversold, and it went up a little bit in the channel this week. So, so gold is interesting. It's traditionally been a hedge against inflation. So as inflation goes up, people gravitate towards gold because it holds its value over time. And that's worked in the past year, but it hasn't worked the past couple of years. Let's look at more of our talking points. Okay, we're going into June, one of the worst months for stocks. We're overbought right now. So you don't want to get too carried away. We're right with investment. We don't have a whole lot of momentum in the market either. So right now, the momentum is kind of waning. We don't have that many stocks above the 200-day and 50-day moving average. We keep track of these because that's a sign of momentum. As the number of stocks that are above the moving average go down, that will lead eventually to downward trending markets. But you can see that you can see that the S&P and almost every other sector we're tracking. Okay. They're all above the moving average. Almost every sector we're following is above the moving average by quite a bit. So that's still positive threat to the market. Let's look at more of our medium habits. So our inverse correlation to the U.S. Treasury and the S&P is continuing. So anytime you're trying to predict where a stock is going or where the index is going, a lot of times you look at the Treasury. If the Treasury is going up, like it is today, you expect the stock market to go down. So that correlation is continuing. let's look at the price of oil is up a couple percent this week. That's the only major change. All other major variables that go into stock is are basically unchanged this week. The fear and greed index, the investing public is becoming more fearful. So this could lead to this is pointing towards a weak market, a market where perhaps there is more selling than buying, and that could lead into our seasonality that we're our seasonality idea where in the summer months we have a weaker market. Okay, but the AAII sentiment is still bullish. That means the average investor is still bullish. It's not the time you want to buy. So my guess is probably the month will be really fearful, and then this is the bearishness will be higher than the bullishness. Right. So okay, VIX right now, the average market participant is still replacing. They're not buying protection. We're a little bit fearful in the stock market, and we're not super afraid with everyone selling. We're just getting to the point where we're fearful. And okay, so the best sectors this year have been IT and communication services. And the ones that did worse last year are still doing good this year. So the utilities doing that they did the best worse last year are it's performing better this year. In our themes for our growth themes for this year, AI revolution has done really good so far this year. We're having a little bit of correction today. We'll go over some of that. In a weight loss drug scheme, and they're also performing good. So Eli Lilly is up 51% this year, which is pretty good. And we still have the things regarding AI. There's some subsectors like building out the data centers, demand for electricity, and cybersecurity. These are all related to the AI story. All right. Right. So let's look more at what's going on in the news. Okay, this is okay, let's look at the stocks going up and down today. We have Alphabet, which we've been following. The Texas Instruments. This is one of Dan Mal's favorite stocks for this year. We have okay, it seems like a lot of the stocks that went up with the AI thing this year that ramped up a lot are going down a lot now. And the ones that were ignored, the old school stocks, they were kind of ignored, are going up. So we have Broadcom, NVIDIA, we have Micron. These are all directly related to the AI infrastructure build out. And I think we could call it profit taking because we'll go over the parts of these stocks a little later on. But let's look at the stochastics for NVIDIA. You can see that NVIDIA's had a parabolic move. It's been overbought since the middle of May. That's been a month. And you can see it's reached, this is pretty unheard of. It seems like what's happening right now is we're going to be correcting down to this. We're up we're going in this little channel. I'm just gonna click down to here. Um, it hasn't been oversold since the middle of April. So we're gonna watch this. It's super overbought. This is a parabolic move, and um, all the AI stocks related to this have similar charts. And so we're just gonna consolidate. And at the end of today, there's a realignment of the XLF, not XL, one of the tech ETFs, and that could um, that can make people buy a lot of the Nvidia stock. Let's look at what else is going up and down. We have AXON Enterprise. They actually make the video cameras um, for the police units. So whenever you see a police cam recording, that's most likely AXON device. That's and they also are going into there are also companies that are using video in stores for monitoring shoplifting and things like that. So that could be a stock to look at. We'll look at this another day. But this is a stock that could be growing into real into retail stores. So for instance, if Walgreens, if you had someone carrying the camera in front of their chest, that could take a picture of someone while they're shoplifting, and that could record someone doing something in the store that could help the store. So we'll look at this later on. It's a very interesting stock. And I think they give away or sell their cameras at a really low cost. And their theme is the razor blade model. They sell their cameras inexpensively, but they charge police units for storage of their video, and we call their videos for so that services ongoing services revenue for maintaining the video feeds and recalling these is what's making this a very good stock. So let's look at all right, so you can see HPE, they're directly related to the building AI related servers. We have Micron, they're making the memory for the AI servers. Broadcom is making AI chips. They're actually doing a split in stock, 10-1, 10-1 pretty soon. All right, that was a good one. Let's go back to our talking point. Okay, so so far Dan Now's picks are doing pretty good. This Amazon is up 22% this year, Meta's up 42%, Texas Instruments up 15%. XBI just started moving today. It's up 0%, and KWeb is up 6%. So so far, whenever next time Dan Now says something or gives a prediction, we're gonna listen to it because so far his picks have been pretty good this year. Okay, here's some charts that I pulled out that are pretty interesting. You can see that the utility sector ETF, XLU, is oversold. You can see that it's under the Stochastics are under 10, and it's at the bottom of this channel. And today, with today's sell-off, I wonder what. Let's look at the guy. We have to expect utilities. Okay, utilities are down a little bit more today. So it probably is at the bottom of this channel. So utilities are at a buy point. Let's look at uranium. Uranium is actually oversold, and they're at the bottom of the channel. And let's look at PepsiCo. You can see that it's oversold and going up at the bottom, near the bottom of the channel. The interesting thing about Pepsi is there was a report that came out that they're not the number 2 soft drink anymore in America. They're number 3. And Dr. Pepper is actually number 2, which surprised me. I thought it was Coke and Pepsi strong number 1 and 2 for a long time. And all of a sudden, Pepsi is number 3. So they might be spending a lot on advertising to get their number 2 ranking again. Let's look at Verizon. You can see a lot of the stocks that we're following are starting a sideways pattern. And that's kind of even the growth stocks we're following. So as we go into summer, there's not going to be an expected return. As you can see, okay, you can see that there's not a whole lot of returns in the summer months. So we're expecting a sideways market, not an uptrending market. So a lot of the stocks we're following are starting a sideways pattern. So whenever we're looking, like right here, you can see Pepsi is kind of in a sideways market now. You can see Verizon is starting at the channel where it's not going up, it's just going between an upper range and a lower range. But more of our stocks are falling into this now. So the time to buy the stock is whenever the stochastics is going lower and it's at the bottom of its range. The time to sell it or not buy it is whenever it's overbought and near the top of its range. All right, so yeah, there was a news for Broadcom. It had great earnings. They had 10-to-1 stock split. This is an example of an AI company. And they sell chips. And I thought it'd be interesting to go through the fundamentals of Broadcom. We went through this before. It seems like they're growing around 20% for the next couple of years. So 20% from this year to next year, then 10%, and then 37%. And the PE is 72, which is a pretty big PE. So it's 3.6 times overvalued. You can tell that's the play ratio of the stock. You divide the price to earnings ratio by the growth rate, and that tells you how much times it's overvalued. So this is 2 prices for me to look at. Yeah, there was a news story that FDA approved, and FDA Board of Advisors approved Eli Lilly's stock. Eli Lilly's recent Alzheimer's drug, which is an advisory panel. A lot of times that advice is taken by the FDA when they do approval. So we have a stock in Eli Lilly that's, I'd say 80% chance we're going to get a news story that's a catalyst for the stock, that they're going to have their drug approved for Alzheimer's. So that is something to keep in mind in the back of your mind whenever, if we have a sell-off in the middle of summer. They will have that 10% upside day whenever their drug is approved. So right now it's overbought. Let's look at Eli Lilly's stock. Okay, you can see that it's at the top of its channel. It's going up in a zigzag. It's at the top of its channel right now, and it's overbought. So it's expected that it'll trend down here, which is now like 5 or 7% from where it's at right now over the summertime. So whenever you're investing, you got to keep track of these news stories and possible catalysts for the stock to go up. Whenever there's a news story that comes out and everyone's selling, such as there's a new war or there's a crisis with borrowing money or something with a foreign country, you have to keep in mind all these catalysts that are for every stock we're following, so that So you can take advantage of situations in the stock market when things are going bad for a different reason. Okay, there's this article about waste management. They're going to purchase a company called Stochastics, and waste management is a company that does um, um, garbage collection. There's like two major garbage collection companies in America: Republic Services and Waste Management. So the thing for this stock is, as the economy grows, there's more trash that needs to be collected. So they have that going for them. Also, they get to raise their prices over time. The other thing for this stock is as they collect trash, they have natural gas. There's actual gases coming out of their landfills that they're capturing and selling, and they're also recycling too. So these are some catalysts that help the stock grow, even though their basic what they sell is staying the same. The interesting thing about this is they're getting into a different type of waste management, which is for hospitals. So it's medical waste. This could allow them to expand across America collecting medical waste. So that could be like another little reason to own this stock, because there could be a leader across America in medical waste collection. Okay, so if you look at the waste management stock, you can see that the time to buy the stock is when it's at the bottom of the range that was last week, and right now it's starting to go back to halfway between overbought and oversold. Anytime this stock basically follows the it follows the economy. So if we have a recession, where the recession is whenever there's less economic activity in America, and this stock will go down with it. But as the economy, 90% of the time, the economy is growing. So there's a good chance the stock is going to be performing good over time, maybe growing 10%. It's not, okay. So let's look at the projections for waste management at a time. The next couple of years, what I do for looking at annual earnings, the earnings estimates, I go to E-Trade, I look up this chart, it matches up the stock chart to the earnings estimates. This is one of the most powerful charts according to Peter Lynch, the earnings projections against the actual chart. Peter Lynch likes buying a stock whenever the earnings estimates are still going up in a straight line, and the stock is down. Waste management happens to be up right now because it's a strong stock. But whenever it sells off, that's when Peter Lynch would be investing in it. But you can see it's growing about 10% a year for the next couple of years. So they have a 1.4% dividend. So the total return is around 11.4% per year. But their forward PE is 28, so they're really expensive. They're 2.5 times overvalued. A lot of times people pay more for stocks when they have a moat like this company does, and when they have a monopoly. The other thing, let me see. The other thing about waste management, it's very hard to get permits for waste in America. They're not giving away permits very easily. It takes maybe 5 years for a permit to be issued. And then on top of that, it takes another 5 years or so to build a waste place. So that whole process, it takes that adds to their moat for their stock. So that's why I like the stock. I bought this stock during the pandemic, and I saw it as, almost every stock was going down at that time. And I thought it was a stock that was strong, would be growing over time. So this is a stock you might have to wait a while to get a PEG ratio of 1 for, a lower price. It would be like half price before, like where it is right now, before it would be a PEG ratio of 1. All right, so for the statistics, it matches a lot of the things we're looking for. The return on equity is 35, profit margin is 12. These all matching, what we're looking for. You can see the PEG ratio is 2.5. That is, pretty rich. And the PE is 28. You can see it pays a 1.49% dividend. So that adds to that total return. All right. The last thing I thought would be interesting to go through is some of the changes made in some big mutual funds over time. Here are the top holdings for Fidelity Magellan 2 years ago, 3 years ago. And this is whenever you look at the returns for mutual funds, they're usually around 20% a year. And this Fidelity Magellan has averaged like 15 to 20% return for the past 20 years. So whenever a mutual fund holds the same stock, you can see that these stocks are held, over a multiple years. So there's a good indication that if you have Microsoft, Amazon, Facebook, Visa, Google in your portfolio, you're going to get similar returns to these mutual funds. And they're good stocks to buy and hold because mutual funds are penalized whenever they're getting into and out of stocks because they have to realize these capital gains, and the shareholders don't like paying gains at the end of the year. So, and Fidelity has like an unlimited amount of resources to research stocks. They can actually talk to presidents of companies, and they have more analysts or resources than we do. So it's a very good idea to piggyback on some of the best ideas that they have held at the time. You can see in this example, they've sold the Apple in the past 3 years. They sold Procter and Gamble, and they sold the Home Depot, and they bought NVIDIA, Eli Lilly, and Broadcom. So that's an example of changes in the portfolio. And whenever a company like Fidelity changes their mutual fund holdings, it's a good idea to start looking at these new positions. Let's look at Fidelity Magellan. It's still Fidelity family, but it's still a little bit different management. You can see that they sold all of their Facebook, which is interesting. They sold Visa and Salesforce.com. And they bought a really big amount of Berkshire Hathaway, NVIDIA, Eli Lilly, and Apple. But they've kept their Amazon, Microsoft, Google, and United Health. So I like to focus on the ones they keep, because that's a very good indication that they almost doubled their position in Berkshire Hathaway. That they stated after before. But I also looked at stocks that are added to the mutual fund, and I wait for these stocks to go down because a lot of times we have market sell-offs, and if they've added recently to a position, it's a real good indication that it's a good stock. And sometimes stocks just sell off on news that are not related to their concept. Okay, here's our last one I wanted to go through. T. Rowe Price future growth future price. This is in 2020 what they were holding. You can see that they held a lot more Amazon in 2020. I guess with the boom during the pandemic, that people will be buying online. They reduced their holdings at that time. It's more than 2.5 times their position in Microsoft. And they added a position in NVIDIA and a brand new position in Apple. They bought Eli Lilly and United Health. We can see a theme here. We've had United Health a couple of times in the development portfolio. And Eli Lilly was also added to the other mutual fund. You see that they sold a lot of the China holdings of Alibaba, Tencent, and they sold PayPal. So, anyways, I always do this exercise once every quarter because the mutual funds are forced to present all the stocks that they have every quarter. So it's really good to go over the stocks that are top stocks in every mutual fund, just to see if there's any added or removed for ideas for them. All right. And that is what I wanted to show today. So thank you for attending, and I hope you have a good next week with investing. All right, see you next time.